Hello traders and welcome to another video review. Today is Tuesday the 28th of September 2021. Let's take a look at the Forex calendar. What do we have here? Well, the London session will not be that much interesting. We got only the JFK consumer climate from Germany. As you can see, it's better than expected, 0.3% versus minus 1.6%. and 38th bond auction from the UK. But during the New York session, we have plenty of data from the US economy. So we have a good trade balance, wholesale inventories, house price index, Case-Shiller 20 city index, and then we have a consumer confidence, the highlight of the day at 4 o'clock. We have plenty of speeches from the FOMC members, Charles Evans, Jerome Powell, of course, the Federal Reserve chairman, and then chairperson Janet Yellen and Raphael Bostic. In the meantime, we have Richmond Fed Manufacturing Index scheduled for release at 4 o'clock as well. So plenty of data, plenty of events in form of speeches from the US. So let's take a look firstly on a technical picture of US dollar index. What do we have here? Well, the bulls are approaching the highs from the end of the August, just as expected. We broke above the 93.42 level, and we are approaching 93.70 level. This is the next target for bulls. Nothing new here, just as expected. If we break above this level, of course, then we can go towards the upper channel line around the level of 93, 94 points. So that's the US dollar index. Pretty straightforward, nothing has changed here. Everything is going, as you can see, according to the plan. Trying to find some levels for you guys. The 94.27 is the next target, technical target for bulls. This is the horizontal technical resistance levels, if of course the highs from the August are violated. So if the US dollar index is going up, what is going on with the euro dollar? Well, the euro dollar should go down, and it does. It does, going lower towards the end of the August 2021. This is the low. We are approaching the low on the euro dollar, and we are approaching the highs of the US dollar index. So nothing new here. Rejection from 1.1752 after a breakout test, rejection, down move, continuation. We have still kind of a negative territory, but not yet oversold. The market is starting to diverge, right? Because we might have in a minute new lower low below 1.1666, and then there is no new low on the momentum. However, we might have new low on the momentum if this drop will be sudden and dynamic. If the level of 1.1666 is violated, next targets for bears are 1.1613 and 1.1604. So those levels are kind of old, because those levels are from last year. This is 2020, 4th of November. So this is kind of a level that if hit, then the euro dollar will be in the lowest level in 1 year. So that's the euro to the dollar. What is then doing the indices, right? So S&P 500. If US dollar index is going up, euro dollar is going down. What is S&P 500 doing? S&P 500 posted very interesting candle here, red candle, and today's pre-market opening on the market is already below the yesterday's close and yesterday's low. very interesting, because we might be going lower today on the S&P 500, and then market participants might wait for the highs on the US dollar index to be tested, broken, violated, whatever they do. It looks like the US dollar is in a bullish phase. So momentum, we just hit the 50 on the S&P 500, 50 levels, 50 level, 50 points level on the RSI, and now we are going lower. The market reversed, and now we are going lower. The market already points to the downside, and this is the conclusion from this price action and from the RSI. So it looks like the bears are back under temporary control of the market and might push the prices way lower. Of course, we should see the next level of 4,300 to be tested if this momentum will increase. Of course, I'm talking about the downward momentum. So okay, US dollar index going up, euro dollar going down, S&P 500 going down, at least yesterday on the intraday basis. So what is gold doing? What is doing the gold, which is highly related to the American dollar? Of course, this is spot gold market quoted to American dollar. As you can see, a rejection from 1,760, rejection of the trend line, test of this technical support 1,741. Today we have a breakout lower. We already made a new lower low at 1,735. So gold is going lower. Gold is going lower. Where is the target? I think we should penetrate the targets from the last month with the lows of 1,684. So this is that candle. That candle lows might be tested. If violated, of course, then we have a very strong level here. This is the zone between 1,677 and 1,658. So it's almost $20 zone of demand. So please keep an eye on the gold. Of course, all of these measurements, Fibonacci measurements, are these measures for that move to the downside. So right now we don't quite need these measurements. All we want is this 61% Fibonacci retracement of the whole move up. So right now, after the false breakout, we are back under the trend line. We are going lower on gold. There might be some kind of a pause around the 1,723 level, but then there is only 1,684 level as some sort of a temporary technical support for the market participants. So gold is going low. Gold is going lower towards the 1,689, 84 levels, which is in line with what other markets are doing, right? So it looks like overall we have a situation where the US dollar is getting stronger across the board, and the internal market correlations are positive for this scenario. US dollar index going up, euro dollar is going down, S&P 500 going down, gold is going down. So last but not least, what is Bitcoin doing then? Well, Bitcoin doesn't want to go up. At least this is what I can see here. The momentum, as you can see, is still below the level of 50, right? It's hovering around 40 right now. There is still no breakout of this short-term trend line after the bounce. ABC wave corrective cycle completed. Bounce was here, higher level 44,977, around the 45,000, of course, and there is no breakout. There is no breakout above this short-term trend line, which means the bears are still pushing. The bears are still pushing the market to go lower, which means the people are, of course, selling Bitcoin and buying the US dollar, as in this example, or the Tether or any other coin related, stable coin related to the US dollar. So please keep an eye on the current situation, because we might have very quickly. It looks like a one more thing. It looks like a short term, like kind of a triangle. That's what I'm trying to show you on the chart. Let's use the black trend lines. Some sort of a triangle, just some sort of a triangle. It's here, right, on this chart. So any breakout lower is the breakout out of the continuation pattern. And what kind of a continuation should be? Downward continuation. So move down, triangle, another move to the downside as a continuation of the breakout. So let's see what will happen in the nearest future. The next target for the bears is 38,307, which is 61% of the Fibonacci retracement. So that's about it for me for now. US dollar strength across the board. That's my conclusion from the analysis. Thank you very much for watching, and I hope I see you guys tomorrow. Take care and bye bye.